Jeff Peterson from Heartland Farm Partners is our corn and soybean market analyst this week. Condition ratings for U.S. crops are in favorable territory. In corn, the latest progress report shows scoring unchanged from a week ago and the best for this late in the year since 2004. The U.S. Department of Agriculture made slight improvements to the country's soybean ratings, and the percent of Nebraska's beans in good to excellent condition is better than any of the last 4 years. The agency is scheduled to release its September crop report Monday the 12th at 11 a.m. Central Time. Jeff joined us Thursday morning to discuss what could happen before then. We began by asking about current crop conditions.
You know, the current crop conditions, the crop looks good. There's a few problem areas. Over the last week or so, I've been traveling quite a bit in areas. There's some problems out in Ohio and Indiana and also back in South Dakota, but overall, when you hit corn crop rated 75%, it was unchanged for the week. That's really good nationally. As we dig into those numbers, Jeff, what we found going back to 1986, that'd be the 6th best corn crop rating out there. So that's really good. We look at Nebraska, though, it's about the 16th best crop. So, I mean, there's been better ones out there. Soybean crop is the one that I think I'm really looking forward to see what the yields are. You take a look at soybeans, we improved 1% from last week. We're up to 73%. That will actually, going back to 1986, is the best crop we've actually had on the rating. In Nebraska, not quite the case. The crop is rated better at 77%, up 1% from last week. But honestly, there's the 11th best one. So there's been better one out there so far. But overall, it looks like it's going to be a good one.
If you look at market movement over the last 2 weeks in corn and soybeans, it's not been good, but exactly what's going on here?
Yeah, you know what? It all started off with the crop report back on August 12th. We came out with USDA's corn number, a big one at 175.1, and then we come in at a 48.9 on the beans, and those were big numbers. But what was interesting is the trades action. You know, that particular day, actually the market closed very well. Market traded down to 322.5 on the corn side, and over on the bean side, you know, with the trade we had there at 962.5, we thought that was actually putting in some lows long term. Now it did short term. What was amazing is over the next 7 days, the corn market went from there, went all the way up to 344.25. But then, Jeff, it reversed, and it's been nothing down, been down since then. And actually, we came all the way back down to 314.75 yesterday. And starting with the corn first, you know, that's really all been a function of the funds. They've been continued to sell in here. The yield out there, initially, when you looked at how that yield compared to Pro Farmer's number when they came out, we thought that'd be a little bit supportive. So it's actually been a lot of fund selling, and the fact that I think even though the trade thinks the yields are going to come down, they don't think they're going to come down as much. Is what they're thinking.
Yeah, where do you think the market goes between here and the next crop report on the 12th when they could shift estimates again?
Yeah, I think the market's going to be kind of range bound in here in the short term. I don't think we're going to see it jump up out of here. We're looking for it to find a bottom in here before that report, because I think going into that report, I mean, everybody's going to be a little bit hesitant to take a new position.
If you're looking at some possible selling opportunities either before that report or going out into the 2017 crop, what's the advice?
Yeah, I think right near, the biggest thing, and we've talked about this before, is this is a time to just be very calm and cool and patient. I would try to put off any sales if you can help it. There'll be better pricing opportunities down the road. I think between now and the crop report we have coming out in September, I think the market's going to be pretty range bound. It's trying to carve out a bottom in here. There's a few technical points we want to be aware of. You know, when we fell down to the 314.5 area, that broke through a 318 area, and now we actually open it up down to the 296 area, but I don't think we go down there. And going back on the beans, when we fell through the 943 area and traded all the way down to 938, our next technical point would be 918. But we think fair value for both corn and beans is really right coming in these areas for the lows.
Yeah, I might have a follow-up below 3, but it goes off of this. Where are the funds at, and what does that mean?
Yeah, right now, Jeff, they have piled into this market hard. They're actually 221,000 short, and the last time they were really this short, we'd have to go back to March of this year. So they've taken a pretty bearish bet on this crop. Beans just the opposite. They're still long 92,000 contracts in here. And I think their thought and what they're betting on is the fact they know it's going to be a big yield, but there's some big demand out there yet. And the stocks for soybeans, they're still rather tight. I mean, they're more abundant than last year, but they're tight enough that any little problem out of South America can go ahead and set this market heading higher.
If a futures price would fall below 3, does that trigger anything psychologically from funds? Is it too early to say?
Yeah, I think it's too early to say, but I don't think they want to pile into it there,
Okay.
honestly. It's very much a psychological point, but I don't think they'll pile into it and take it down, way down there. Now, you're going to hear individuals out there, Jeff, don't get me wrong, talking about prices down there, but we just don't think it needs to go down there for fair value.
More locally, how do you expect basis to move as we get closer and maybe into harvest?
Yeah, basis is going to be kind of the interesting one this year. And the reason I say interesting is that I don't think it's going to get as wide at harvest as a lot of people think. Now, don't get me wrong, there's a lot of corn out there, and there's going to be a big crop. But what I think is that the farmer's going to do everything he can to keep from selling. And this is where it's important. The demand is strong, and the demand is front-loaded, meaning that there's going to be a lot of bushels that need to ship. There's going to be a lot of bushels that need to be fed and used for ethanol all during this last quarter. So once the farmer tucks these bushels away, it's going to be hard to get it out. I think we see some basis weakening going into harvest. So if you've got harvest bushels that need to move, you need to get that basis locked up. But if you've got basis you can wait on and not have to deliver till after harvest and you're out into November or December and later, you can go ahead and wait on that basis yet. There'll be better basis opportunities out there. And I think the same thing applies to the carry in the market. We're sitting around about 10.5 cents today on Dees. I don't think we're going to get out. We'd like to see it get out to 15 cents. I don't think it will. I think if you can get that carry from Dees to March out to 12 or 13, if you've got some hedges, roll those. On beans, honestly, we're not much better than a couple, 2-3 cents at the best. I think we got to be careful on that market. I think as soon as we get through harvest, we could start seeing that inverse or that market trade from the November on out to the January could actually trade at an inverse.